good morning, everyone. So you have the best of the speakers from the country, and we have tried our best to cherry-pick the speakers, those who could give a wide perspective. And that's why you can see general insurance, NBFC, a foreign bank, and a small bank. Small bank is doing a lot of new things, actually. So this is what we are going to discuss in this panel discussion today, specifically about the future of BFSI. So as a journalist, whomever I speak to these days, every banker is interested in a digital innovation, and mostly the future of the financial institutions. So that's why we have come with this topic, how the future of the BFSI sector will be. And we have the best of the speakers. I will start from you, ma'am. You have been in the banking industry since close to 30 years now. You have been a CEO with Standard Chartered since last 3 to 4 years. Most of the times what happens for the banks or the financial institutions is, while adopting any technology, we look at the user case studies. For you, there must be many user case studies because you are a global bank and you must be having a lot of user case studies already available. So keeping those user case studies, looking at the growth of the country and your presence in the India, how do you first see the future of banking specifically for you?
I think clearly the way the whole fintech space is disrupting the whole way banking is done. To me, it's all about banks being quite agile and innovative in how they're addressing the customer needs. I think as banks, we have to reimagine the whole customer behavior and the whole customer experience. So today we are seeing a customer completely wanting instant gratification, literally 2 or 3 clicks, and the customer wants to be done with his banking services. And second is the way banks are working is about hyper-personalization. So clearly, a customer doesn't want a general suite of products that from a bank that this is my products and this is what I'm offering you. It's about a customer's needs and being customizing for that. So if I'm a customer and I'm in a mall and I'm a regular shopper in a certain store, from my credit card statement, the bank will use that detail and actually give a personalized offer when I'm near that store, saying we're offering this on your credit card spend. So I think banking is moving towards that. It's a bit like what Amazon does in terms of the whole customer experience. Secondly, I think as banks, we really need to look at how are we changing the whole DNA of the organization. How are we reskilling our people? How are we changing the whole organization centricity towards the customer? To me, that's also extremely important because it's about reskilling your people and reorienting your people. So as a CEO, there are many things that banks have to do. The other struggle banks have compared to a fintech is we have legacy systems, and clearly they are not as agile. So as banks, a lot of the focus is on how do you do technology development in an agile manner. So in our bank, we have built that, and a lot of our recent app was done in an agile manner. Agile development is where the technology people and the people in the bank who are facing the customer actually get together in a room, and at every stage of the development, the teams are involved in giving inputs so that you have a proposition which is very customer-centric. So these are the few things that banks need to do to be relevant maybe 3 or 5 years hence.
Interesting thoughts, ma'am. In fact, most of the banks are trying to rebrand and market themselves also in an innovative way. Recently, Standard Chartered Bank had a brand ambassador for your digital innovation, Anushka Sharma. And before that, Deepika Padukone became a brand ambassador for Axis Bank. So you can see where the innovation is also happening on a branding side and specifically banks. I will come to you, Mr. Sabharwal. You have also spent almost 25 years in the industry. And your perspective is very important for me because you came from a bank and now you're heading an NBFC company. Obviously, there is enough disruption in banking, but I see most of the disruption is happening in specifically NBFC space. Every fintech wants to get into the lending business right now. I mean, the rally was into payment sector, I think 2-3 years back, but every fintech today wants to operate into the lending space. First is how lucrative these new fintechs are, and how do you see partnering with them the future of NBFCs?
Partnership is a very important theme for the future. We're seeing this in a big way today. For example, we are also partnering with a lot of fintechs. It's a mutually beneficial relationship. Fintechs, are pretty good on innovation. They've done a lot of work on improving customer experience, but they are short on customers or they are short on products. So, and that's where, we're seeing a lot of marriage happening between banks and fintechs, NBFCs and fintechs, where they're finding ways to work together. Now, a lot of fintechs moving into, the lending space and becoming NBFCs. Probably they want to, own the customer experience end to end and also look at how their valuations can grow. And having a book really helps. As far as how this will play out, I have always seen that in the lending space, it is not prudent to make short-term judgments. If you originate a portfolio, you have to let it mature. You have to see how it performs once it matures. And that's the reason if you are in a short-term product like unsecured personal loans, you will come to know how good your performance is in 2 to 3 years. And if you are in the business of mortgages, you'll come to know in 3 to 4 years. So you have to let the portfolios mature. You have to see business cycles before you comment on it. But the good part is today, we are not looking at just traditional data to take decisions, but we are looking at a lot of non-traditional data, transactions data, behavioral data, which is all available, and how people are meshing the traditional and the non-traditional data to make decisions which are far better than what they were made in the past.
So after taking some perspective from the bank and the NBFC, I will turn to insurance now. So, Mr. Singhal, I have been talking to you. In fact, I have a privilege to interview many times. And insurance is very close to my heart because that's the first sector I started reporting on when I became a journalist, when I joined CNBC in 2007. And I remember, Mr. Singhal, when I spoke to you, I think 6-7 years back, you said, after 8-9 years, people will buy insurance on Facebook. And that was the time, I think hardly 1 or 2 companies had started issuing policies online, and the ratio was almost not there. Have we reached to that level? Point number 1. And how do you see the future?
Thank you, Amol. Always a pleasure speaking to you. So I think right now what legacy companies are looking at is using tech to simplify solutions or getting more insights on the customer for offerings. What is happening is more interesting. The scale at which discussions happen is going to create new business models. So let me tell you, and this has happened in China already, this particular huge company, which is in the e-commerce space, opened up for its consumers and anybody who wants to become a membership in which you enroll, and if somebody falls ill and has hospitalization, the bill of that gets distributed among all its members. Which technically means, let's say now they have close to 30 million members. If somebody has cancer, which means if you are all part of that group, then we have to contribute something like 1 paisa, 2 paisa, for the, and that they operate at a 7% cost. And since it is not pure insurance, it is not regulated. Why would somebody buy a health insurance? So in India, if somebody just sets it up with a huge base and says all members participate, anybody falls ill, gets done. And for fraud mechanism, they have an inbuilt system of voted people who look at the cases at a 6 to 7% cost. The pure sheer scale at which the things are happening, the business itself will disrupt. Is no more about simplification of the process, is no more about selling online, is no more about looking at things differently. Now let the health space, which is 25% of GI industry, it can disappear overnight the moment somebody starts this. Yeah? The second is automobile, which is again about 40-45% of the GI space. If I look at Elon Musk and his Tesla, an electric vehicle does not require maintenance. Why would you require dealerships? Why would you require insurance when they have so many anti-collusion setup coming through? And promoters like Elon Musk saying, if anything goes wrong with the car, I am responsible. Which means that for my industry, if I add it together, 70% can disappear in the next 2 to 3 years, and we're still struggling about discounts and figuring out how to understand the customer better. The business model transforms at a tipping point of scale, which legacy companies miss out, and that's what they killed out. So the Facebook selling and all is happening, Amol. But the problem which I saw 7 years back and what I see today is very different. My whole business will disappear in 4 years' time for models which come on scale at a very low cost and solve the customer problems en masse. No? Why would somebody come to a legacy company with so many question and answers and figuring out at a very high cost why to do insurance? No? I think that, to me, is a sheer issue right now.
Absolutely, when there will be an electric car, the entire insurance model will be redefined, and perhaps, like they say that, if you have driverless cars, it would be good because you will not have a drunken driver at least. So, I will move to Fino Bank now. We have Mr. Gupta here. Mr. Gupta, you are operating in this space since last 3 years now. Obviously, you worked with ICICI and you are a profound banker. But after getting the license as a payment bank, you are operating since last 3 years. And where do you see future? I mean, you're still, must be getting an admission in junior KG or senior KG. How do you see yourself when you will start going to school? How is the future?
Thank you, Amol, and thank you, ET, for this session. So the way we look at, and we came 2 years back, we'll complete our 2 years of bank in another quarter or so. Fortunately, we don't have legacy systems, so that was one big advantage we had. The second big advantage was we came in at the time when India Stack was already at a very mature level. So a lot of technology which we have adopted in the bank comes from India Stack, the Aadhaar platforms, the NPCI platform. So our entire future depends upon how do we develop or co-develop the technology along with the India Stack platform. When the bank was set up, we looked at the ecosystem in the country, and we realized that there is a very hyper competitive market at the top end of the segment, the upper pyramid of the segment. And we wanted to look at and create a differentiation in the industry. We were differentiated banks. Our objective was to further the financial inclusion, to look at green pastures, to look at new ways of doing banking for the underbanked segment. So we looked at two big factors. We said lower middle class and rural is going to be the focus for the bank. So the next billion is the focus as far as the Fino Payments Bank is concerned. We are looking at the entire technology innovation from a next billion population point of view. I personally believe, and you would also largely agree with me, is that the urban environment, the higher income or the middle income, is already very, very competitive market segment, and we get offers. I'm sure everybody on an average day would get about 3 to 4 calls on a loan or some other credit card or a debit card or whatever it is. But as you keep on going down the pyramid, the reality really sinks in. And that is the time when you need to focus on technology. How technology can take to the next billion is something which we are looking at. The way the banking ecosystem is evolving in the next 3 to 5 years, we see that digital is going to become the mainstay of banking, not only in the urban India, but also in the rural India. There is a phygital model which we in Fino promote. It's a product innovation in a way. We have the physical network through merchants and branches. Fino has about 100,000 merchants which are operating right now. Then there is a digital model which comes in. In between the phygital, the way it is defined, in between there is a digital assistance. So assisted digital becomes the mainstay for converting that 500, 600 million people who are largely connected through a physical environment to come into a digital ecosystem. We see on an average 30 to 35% of our customer, which is in the lower middle class as well as who are there in the rural, are becoming digital customers. And largely of it is happening because our branches, our merchants are helping them to convert into digital. The entire ecosystem around app is very healthy ecosystem. People are able to adapt to app-based banking very quickly, but there is a leg in which you have to assist the person to become digitally savvy. So from our point of view, technology is going to drive the entire revolution, not only in the urban India, but also in the rural India. But there is a leg which is called assisted leg, in which you will have to handhold the person for the first few months, and then over a period of time, they will become digital. Once they are digital, obviously the transaction volume, the velocity, the balances, the cross-sell improves with the digital innovation, and as some of my speakers have already said, is the fact that the digital adoption is far more, and it is far more long-term also. So that is the way we think when we look at the next billion population from a FINO point of view. Thank you.
Interesting. So we got some perspective about how the future looks like. Now let's try to understand how the strategy these CEOs are going to adopt to build that future. And ma'am, I will come to you. So we are talking about the digital innovation, we are talking about the financial journey. So if I ask you specifically, how Standard Chartered Bank trying to redefine the customer journey? Because the journey, like you said some time back, is going to be really different in future.
Clearly, as I had mentioned earlier, I think the whole approach is to reimagine the customer and how will the customer behave 5 or 7 years hence, and then work on the whole technology development accordingly. So clearly, most banks in India have automated a large part of the service journey, and a lot of the banks have automated the onboarding journey for a customer. I think where it's very important for the banks to reorient themselves is how do you make money digitally on a customer, because the whole brick and mortar approach has to be sort of maybe for the priority and premium customers, but for the normal customer who's digitally savvy, who doesn't want to sort of come to your branch, how do you reinvent the whole journey so that he can buy investments online, he can do insurance online? How do you sort of guide the customer in that journey? How do you sort of give the information to the customer in a way that he's inclined to invest through you digitally? So I think the whole orientation is how do you make money of a customer digitally? And in that, as I'd mentioned, the whole hyper-personalization work has started in our bank. This is on the retail customer, but when we look at our corporate customer again, even our corporate customer, I think the whole approach is that how do you make a CFO's life simple? How do you digitize a lot of the trade offerings? How do you get the whole cash servicing where corporate clients put CASA with you? How do you give service which is so unique that the customer is inclined? How do you give the whole MIS which is so unique to the customer? How do you take over a CFO's pain? And how do you give all these offerings in a way that the customer wants to bank with you? That's the whole journey for us.
Right, interesting. So the banks will have enough competitions now with each other, specifically to acquire the competitions. Mr. Sabharwal, I will come to you. Obviously, lending is a very, very important topic, and there are like enough borrowers for even most of the fintech companies and lending companies. How are you going to form a strategy? How are you going to redefine that the customer journey will be seamless? Because as we see that personal loans or whether home loans, it takes really long time, but fintechs are actually redefining. So as a traditional NBFC company, how do you see you're changing the strategy for the customer journey?
So the way we have looked at things, we have 4 parts to the strategy. One is about completely reimagining customer journeys. And when I talk about that, we are not trying to digitize the existing physical processes. That's not the way to look at it. But how do you look at it, the whole process ab initio, and see what actually can be done in the digital space, and how do you ensure that is seamless? There were products which were earlier thought that they can't be served digitally to customers. All that is changing. Today I see no product which cannot be served digitally to the customer. The second thing is all about improving customer experiences. And when I talk about customer experiences, it's about knowing much more about the customers than what you would have done initially. For example, today, nobody wants to come and apply for a loan and wait for the whole process of going through the credit journey. Can you pre-approve customers? Do you have enough information available from them just in a couple of clicks, which can allow you to use both traditional and non-traditional data, as I mentioned earlier, to give the decisions right there across? Similarly, Rishi spoke about the assisted digital. It's no longer about a sales channel visiting a customer at his place and collecting information. It's all about when you're visiting the customer, while you are there with the customer, can you give a decision to the customer that you will sanction the loan or not sanction the loan. So it's all about experiences which you provide to the customer. The third is about partnerships. Today is a world of partnerships. I don't think so intelligence lies with just one entity. And how do you work with partners and create a win-win experience such that ultimately the customer benefits. So that's another one big area on which we are focusing. And fourth one is more unique to us because we belong to the Tata Group, a group which has presence across various industries with leadership positions in most of the industries where it is present. So there is a huge opportunity to cross-sell. Cross-sell not only to employees, but also to customers as well as dealers and vendors of the group. So we are working on all these four things: reimagining customer journeys, putting together far better customer experiences, working with partners, and also looking at how we can do far more cross-selling within the Tata Group.
Okay, quite interesting and meaningful, Mr. Sabrawal. I will come back to you, Mr. Singhil, again. And, we are going to complete, I think, 20 years next year. When IRDA came into the picture, government gave license to the private insurance companies, and we have more than now, 60, 65 close to companies operating in country. But insurance penetration is still very less. At least banking is much better than, insurance, obviously banking is a need, but insurance penetration is still very less, and we have not even shifted from, it's still a push product. So when I speak about the customer journey, I would like to ask you, what is the strategy that you are going to adopt to improve the customer journey so that the customers will come towards pull from the push products?
Okay, again, very interesting. That's the problem. You know about insurance a lot. Okay. So let's look at 20 years back. If you had a car claim, Amol, and you got it in 4 months' time, you'd be super happy. Yeah? And the process for you would have been including taking the salvage, going to the branch, getting it ticked, depositing it, and then waiting for the check to come. Today, as a company, we offer you claim settlement in 10 minutes' time of the incident. No? So the customer experience obviously has gone and come a long way. That, I think the industry has done good. The problem is a push product and a pull product. That has to be solved. Now, when we say a push product, and I normally ask this question to a lot of people, when have you in your life ever got up in the morning that today I'm going to buy insurance? I'm super excited, I'm going to go and buy insurance today. When has it happened? Forget about you. Even as insurers also, they have never got up in their life to buy an insurance product. Yeah? But you get up in your life to buy clothes, to buy a car, to buy a house, for that take a loan. So in most of the cases of consumer purchase that you do, you're super excited at some point of life to buy something for which you require something, you do it. But for insurance, I've yet to meet a person in the world who was super excited to get up in the morning and say, today I'll buy an insurance product. Now, that is why traditionally insurance is a push product, which means it requires distribution, it requires a conversation, it requires to understand. But the products are very good. For the cost, what they offer is phenomenal. Like, it is unbelievable. Products are amazingly good by any company. But people, affinity towards the product is not there. And that is, I asked a psychologist this question, why is it so? The human brain is not wired to see risk. The younger you are, the less you see. And if you get the statement, think when you were much younger, you would do things which is very stupid from your standards today. But that time you never found it stupid. You found it very, very exciting. The human brain is not wired to see a risk. So somebody who tells you that this is a risk, buy something for it, you're not wired to do that. And that is why insurance remains a push product. The challenge is, now you can't say, and this is fatalistic, and we want to live with that. How an industry leader will we define push to pull? And that is why I told my team members, people may not get up to buy insurance, but there's another set of people, I'm going to ask them this question, do you have no worries? I've yet to meet a person who said he has or she has no worries. No? If you have no worries, you're in the wrong place, like you can set up an ashram now. But worry is something that people get up with, live with. Insurers typically solve worries. How do we become an end-to-end worry solver? And like Rajiv was mentioning, use partnerships to deliver to the customer whatever worry he or she has, that we shall be the worry solver for times to come. And that positioning of the insurance industry shall move it from push to pull is a belief. And that is why we see our rebranding, which we did as Caringly Yours. And we look at our products now it's end-to-end. Most of the youngsters who are working in some different cities, one of the major worries is the parents. What if something goes wrong with the parents, we want to deliver solutions. In which when something goes wrong, there's sharp fall, we get intimation at a call center, our customer gets intimation at the mobile, we send somebody at the home, get them picked up, get them to the hospital, get them treated from the best hospital, best doctors, and get them back home. We want to now reach a space where we solve worries, because that will be a pull product, if that could answer your question.
Wow, that was really comprehensive, and Mr. Singhal actually added some science into it, being a science background actually. Mr. Gupta, I will come back to you, and I will now ask you. Most of the financial institutions find it difficult to change and adopt different strategies and change drastically what they have done in last 20 years, 25 years, because they are in the market since ages. You being a new bank, how easy it is for you to change the system, to learn from the experiences of other banks and financial institutions, and build something really innovative? Because you are absolutely a new bank, and you have a time and choice to adopt the technologies which perhaps did not work, and you think will work in near future. So what is your strategy there specifically to improve the customer journey?
That's an interesting question. In 2 years, in the banking ecosystem, talking about changing strategies is a little bit early in the life of a bank, because bank looks at 10, 15, 20 years. But in today's world where changes are happening so frequently and the ecosystem is changing so frequently, you have to keep on changing and evolving. If you don't evolve with the changing times, you will probably land up in some issues. So when we set up the bank, that time we were wanting to look at setting up a big branch network. And we said we will take early baby steps in as far as digital is concerned. But in the first, I would say 1 year of our banking, we realized that if we want to become a national player, which payments banks are supposed to be, in that scenario, we can't set up so many branches. So a branch-based model probably would not be the right way to look at the India population as such, and the rural population in particular. So we started to look at distribution as one of our key strengths. We changed the entire thought process around branch banking to more banking outlet kind of banking, where you tie up with merchants, you tie up with local kirana shops to provide banking, by virtue of which, as I mentioned earlier, we have crossed 100,000 merchants because of this change in the strategy of, rather than focusing on branches, to a banking outlet kind of a model, which can really grow very fast. We add more than 5,000 banking outlets per month. Because of the change in strategy from a banking model to a merchant-based model, our transaction volumes also started to grow. One big thing which happened is that the banking model is a very high fixed cost, high operating cost model. A merchant model is a very low, zero fixed cost model, and a low, very low variable cost model. So the entire ecosystem around profitability and as well as the reach started to come in. When we looked at this model, we said we have to build system security so a customer can come to a merchant point and transact as safely and securely as he would do in a branch. So we looked at CSR. CSR in a normal scenario means corporate social responsibility. In our case, we said convenience, simplicity, and respect. So that was the big thing which we started to focus on. We looking at the technology, we looking at that fact of the customer is a lower middle class and rural. We started to build solutions which are quite simple, and we started to build around the entire respect around it. Our tagline also goes, "Kadar aapki mehnat ki." So that is the way we have built up the entire technology, or the entire strategy has evolved. One more thing which we realized very early is that the world is changing. Earlier it was a completely banking world, which we called World 1. The World 2 is more in terms of the fintech coming and overtaking the entire banking or the BFSI, the B2C experience per se, which was World 2. Now, in the last couple of years, as you would also realize, the World 3 has started to emerge, and a lot of my co-panelists have spoken about partnerships. And the World 3 is actually all about partnerships, where banks and fintech companies are working together to co-create products, innovation around technology products, in which both the ecosystems can play their part. So the World 3 is talking about open API or open banking. And that was another strategy change which we did, where we started to partner with a lot of small entrepreneurs, small companies, distribution companies, fintech companies, and by virtue of which the entire open banking platform has started to grow. So the strategy around distribution as well as open banking, I think, is a big strategy change which has happened because of the ecosystem demanding that this change has to be there.
Very interesting. In fact, Mr. Mohanty also mentioned some time back about the importance of open banking and open API. And in fact, many countries, are looking at open API very seriously. So my next question is kind of on the same lines. We all agreed that future will be different. Digital innovation is very important. Customer journey. We are going to develop a lot of products. And like Mr. Sabrawal said, that every product can be available on a digital platform. So ma'am, I will ask you now, since every bank and the financial institutions is adopting technology, how are you actually building your business model on this technology? Are these tech business models really working? How do you see these tech business models working?
So clearly, I mean, all of us are investing because we believe it is working or will work. I think, as I said that, I think one has to focus on higher and higher customer customization, and that is the whole journey that banks are on. And there we are working on partnerships also with fintech, because as a bank you can't do it all. And one partnership, for example, our bank did, which was really nice. We worked with a fintech startup on the corporate side. Today, everything that is related to a corporate's life, you get through the ROC side, through many other government sites which are digitized, the GST and many other records. So we worked with a fintech, for example, where anything that happens in a corporate A, whether a case is filed anywhere in India, any negative newspaper report, anything that is happening in that corporate's life is actually immediately on that day, the relationship manager comes to know about it. And that is how the whole focus is about how do you keep on constantly improving your own capabilities, and also how do you constantly improve the customer experience. And that's where directionally banks are, and clearly the investments are paying off. For our own bank, in fact, our customer digital behavior is 12% higher than the industry experience. We have about 67% of customers digitally engaged with us. More than 2/3 of our service journeys are digitized today in our bank. More than 20% of sourcing that we are doing just in cards and PL is online. So clearly the idea is that how do you constantly improve so that your cost to serve per customer comes down and your cost of acquisition per customer comes down. That's the whole journey.
Absolutely. So Mr. Sabrawal, obviously you are partnering with many fintechs, and tech-based business model is being developed by a lot of financial institutions, companies. How beneficial it is for you? And also if you could enlighten us on what are the major challenges do you face specifically when you are doing a partnership with these fintechs?
So there are pluses which become visible very quickly. We've seen this. I'll just give you an example. As soon as we launched our new website, which had a very different experience, we saw 70% higher engagement, 70% people coming in more there. We introduced chatbot on our, on our website to allow customers to use that to engage with us and get their queries solved. And we realized that in a matter of month, majority, more than 50% of those queries were being answered by chatbots. We introduced, in India, the first time a voice bot to give out personal loans to customers. And we realized that when we gave that option of voice, 1 out of 5 customers was using voice to engage. So, as soon as you start seeing or bring about experiences which can be better for customers, you start seeing the benefits. For example, we use geospatial analytics to find out where the customer is and where is he applying for. And using that, we could do away with 65% of visits to customers. So the whole process becomes more seamless. You see the advantages coming through. I spoke about, assisted journeys. And when we launched our assisted journey for personal loans, for about 17% of customers, we could give our decisions to them while our sales team was talking to them. So these are the pluses which we are seeing. So huge opportunity to digitize all the processes, reimagine customer journeys, provide better experience, work with partnerships. So all that, I think, starts paying off quickly. As far as challenges are concerned, I think so. What is extremely important in today's world is to work with partners who can be there for a long period of time. Second, where the partner, believes in that philosophy of data privacy, because that's becoming extremely important. And, you spoke about initially about security in your initial address, and that is also extremely important. So, we believe that when you are young, when you are starting up, it's extremely important to focus on all of these right from the beginning. And only then can you create, long-term for yourself as well as long-term partnership with other players.
Quite interesting. So, Mr. Singhil, again on the same topic, I will take your perspective. Because insurance companies are also partnering with a lot of fintechs, and there is this InsurTech. In fact, a lot of brokers have taken license as an InsurTech company, and what they're doing is they're distributing policies in a different way. I'm sure you must be partnering with such fintechs. So, one, how important it is to partner with these companies on a business model, and what are the major challenges do you face because these are new age companies and the model has still not been established and tested in India?
Okay, so Amol, at the beginning of my leadership journey, I did not believe in outsourcing. I believe the way to differentiate in the market is if you insource and you create a differentiator, then obviously better in the market. With outsourcing means that every other competitor of mine would also outsource, and for the end consumer, there will not be much difference. But that was way back. As time progressed, I realized that business models cannot be built at the massive scale of transformation just by insourcing. And then I started looking for getting good partners on board and getting end-to-end solutions. So a lot of excitement. I met a lot of people all across the globe, really bright kids with a lot of fantastic ideas and putting it together. And I started a few ventures with them. The problem is now I make an offering to my customer based on partners. And like Rajiv was mentioning, the partner does not sustain for long. The partner may disappear or may wane down, but I'm stuck because to my customer, I already raise expectation of an offering based on. So for me, now what I look at is more established partnerships where I see the source of funding is strong and the intent to transform the business model and the perseverance is high, because that is very, very critical now when I look at, because to my end consumer, I can't have a differentiated expectation just because my partner dropped out. Now this limits the scope of partnership. So we did that and that worked well for us. But then I'm missing out the new excitement which is happening at the front end, the fringes. Now how we are doing it is, we are taking the fringes where we feel the partner drops out, we can supplement it with our strategical inputs and get another partner on board, or we can ourselves do it if the partner drops out. So the consumer experience does not drop out. But established ones are go more into the core of how we are transforming our business and how we are taking it to the next level. So it's a journey. It is not a single solution which fits all. But my personal experience is that you can't be out of this journey of getting partners, getting super excited youngsters who have brilliant ideas of putting it together. I think the more I meet them, the more excitement I see, and that is something which keeps me very motivated to put it together. So I love this space right now. I'm very contrarian to maybe a 10-year view where I felt insourcing was the way to be.
Yes, you are confident. You look confident always. Mr. Gupta, again, being a new bank now, you must be partnering with many fintechs, and you are absolutely betting a lot on the phygital model. Absolutely, when I had a conversation with you 2 years back, you said that what will work in India is absolutely phygital model. Entire physical or entire digital model will not work. So while partnering with now new age fintech companies, being a payment bank, what are the major challenges that you face? Because you are catering to a category of people. You are not catering to each and every one, right? Your focus is absolutely different. So what are the challenges do you face when you partner with these people?
See, fortunately for us, because we don't have the legacy systems as such, and we work on an open API platform, through the API platform, the partnership the first stage of partnership or integration is quite easy to do. The challenge actually comes in more in terms of how do you scale it up. Something to what Mr. Singhal has also spoken about is some of the partnerships we have also seen that there's a lot of excitement in the beginning and then it kinds of fades away. And we have seen in some of the startup world, when there is initial funding which happens, there is a lot of discussions which happens. And as the funding gets tends to dry up, that is the time when you start feeling the pinch in terms of how do you take it to the next level. So from a fintech challenges point of view, I think it's too early to talk about what challenges we see, but I think we should look at the opportunities which we can do, co-create jointly with them. I'll just talk about one product which we co-created about a year or so back, which we call Cash Exchange. This is a product innovation which is like a marketplace which we have done for cash management, in which we have tied up with a lot of fintech companies, a lot of cash management, MFIs companies through the API platform on CMS. So what we are trying to create is, all of us know that in rural India, the ATM market or the ATM or the cash is not very good in terms of the dispensation, the availability of ATM, the cash with the ATMs is not very good. So we have created a supply and a demand as far as product innovation is concerned. On supply side, we have tied up with a lot of companies. Some of them are fintech companies like Ola and other companies also who have a lot of cash with them. And their merchants, their distributors are also collecting a lot of cash, but they don't know where to keep that cash. And if they go to the bank, they can only deposit money till 2 p.m. or 3 p.m. But through our merchant ecosystem, they are able to deposit the money till 7, 8 in the night. So the supply side, we are trying to match with the demand side on the other side through the merchant. We believe that as far as the cash exchange is concerned, is that there is a local cash market which is there. There are a lot of people who have money. There are a lot of people who need money. So we are trying to bring them to a common platform. And this product has, and it helps us to make money on both sides, as well as supply side, as well as demand side. Just in 1 year, we are now touching 2,000 crores of business per month, just on one product which we started about 15 months back. So these are the kind of opportunities which are there. So we look at from the point of view, when we look at Fino, we don't look at, when people say there's a problem, we look at it as an opportunity. So there is a cash problem, look at it as an opportunity. India is 95% cash. And that is not going to go away anytime soon. In our lifetimes, I don't think so it is going to go away. The digital ecosystem will develop. It will become 5, may become 15% in the next 5 years. But the problem of cash is here and now, and it is going to be there for some time. So rather than just focusing ourselves on something which will happen in the next 10, 20 years, we are also focusing on real life problems which are there. Coming back to my first point, is the fact that rural India, the lower middle class, is where the opportunity lies. Bharat is where, there is a recent survey, I'm sure a lot of you would have seen, on which was published by Google, in which they talked about the entire Bharat ecosystem which is getting created, and that is what we are focusing on. Fortunately, we are also seeing some of the new fintechs and partnership companies looking at that as an opportunity.
Right. So now again, coming back to the first question that I asked about future specifically, and we are discussing digital transformation. I will take some specific views, ma'am. Now, we all understand how important digital is, and like some time back, Mr. Mohanty said when he was in a hotel in China, all the work was done by the robots. If you tell me specifically, ma'am, going ahead in next 2 to 3 years, what kind of technologies? Obviously, we understand digital transformation is very, very crucial and important. What kind of new technologies that you are going to adopt, and what kind of growth do you see in the areas that you are working right now?
So, couple of technologies which are there. One is blockchain. Clearly, blockchain is, in certain areas, we are finding that blockchain is getting used. For example, the trade side, the trade digitization side. Clearly, blockchain is a technology that is getting used. People talk of AI. I think all banks have started using AI. Yes. And to my mind, AI is something that will get used increasingly in the next few years till you find some new technology which sort of will replace AI or machine learning. So clearly AI is used extensively in understanding the customer behavior and using his spending pattern, using many other, how his savings behavior is, etc. And then you give a lot of customized products. A lot of your campaigns are sort of using AI. You can use your whatever campaigns you're making to your customers. So I think in the next 2-3 years, these are the few technologies that one will see increasingly getting used.
Okay. What about you, Mr. Sabrawal? Which are the technologies you are bullish, very optimistic on, specifically for the NBFCs?
Rather than talking about technologies, we have a lot of them, and Zareen spoke about them.
Right.
New ones will emerge. But what I'm realizing, what is extremely important, is to look at the tech architecture which one puts in place for the institution. Similarly, something which is becoming even more important is the data architecture which you're putting in place. Because how do you ensure that things are managed in a manner that they are accessible at all points of time and in a real-time basis? How do you put governance structures within the whole system so that you respect customer privacy and you meet your objectives too? How do you take care of security? So some of those things are extremely important. And just one more thing, if I can mention, is when we talk about digital awareness and we talk about customers, it's extremely important for the organizations to make each of their own employees digitally savvy. So how do you start thinking tech first, digital first, mobile first? So each one of us is involved in a number of processes, some which are customer facing, some which are not customer facing but impacting the customer. So how do you start thinking digital first? How do you make people aware of what is there, and how do you make it as a default choice for them to start using?
Great. Mr. Singhal, what about you? You have recently crossed 10,000 crore of premium. We got the release. To reach to our next level, what kind of technologies will you adopt? What are the technologies that you are bullish on specifically?
Okay, so obviously, as you take this question forward, one by one it gets covered. So from Zareen to Rajiv, I think. But to me, what's more exciting right now is the external data. I think the way data is getting built up, look at the government data, the way it's getting digitalized, huge amount of data, the way traffic data is getting built up, the challans are getting built up. Now, all the external data built up is humongous. Companies which can plug and play into all data put together in a data lake are able to come out with ease to consumers, and different solutions and different business models are the ones should be the next level. So in India, we see data creation happening at a lot of different spots. Plug and play is going to happen very, very soon. How do you be ready to handle that massive data, plug and play in a lake, get structured thought process out of it, and take it out? In fact, jokingly, I tell my data scientist time that you guys get paid because we have complicated thinking to give us common sense back after using all the data. No? I think most of the time when you look at it, it's simple common sense which comes out that if you had done this, you could have got this better from a consumer aspect. So data amalgamation, finding insights from that, redefining business model, to me is the future, which is going to happen very soon.
Right, quite interesting. So one thought here is, before adopting artificial intelligence, we should use our own first. So Mr. Gupta, what are the technologies that you are adopting right now and for next 2 to 3 years also?
I think the set of technologies everybody spoke about, there's nothing different as such. There is already very fancy words, half of them I don't even understand. But especially the fact that we talk about artificial intelligence, we talk about machine learning, we talk about data monetization, we talk about a lot of this very fancy stuff, which I think to a large extent is going to get adopted by every company in some life of that company's span which is there. But the way we look at internally is that we used to do transactions worth about $2 billion a year when we started the bank. Now we are on a running rate, we are about $12 billion of transactions we do per annum. So that's about 6 times jump in the last 18 months in the bank. For me, when we look at technology, I think 4 things which are very important. We call it 4S, which is there. The first is the stability of the system. The second is the security of the system. The third is the scalability of the system. And the fourth is the speed of the system. So I think any technology which helps me meet the 4S whether it's security, stability, speed, or scalability, will be the technology which will have to be used in the future. The names can change. We have not seen in the banking ecosystem data monetization or a lot of data lakes and data which has got created to be used as effectively as we have seen in some of the Amazon and the fintech kind of companies. So I would like to see the data which is there in the bank being used effectively for a cross-sell purpose. So just to give you an example, I still get calls from the bank. Do you want to take a 25,000 rupee loan, 50,000 rupee loan? A bank where I have my own accounts. So from there you can understand that the data which is sitting in different silos is not coming to a common platform in which the data can be harnessed and can be used for a real kind of a cross-sell rather than getting all the cross-sell. So what I would like is the data which is being there, people should start using it effectively so that we don't get those calls, 5 calls a day for a very small kind of a loan or anything else. True. So that is one thing I would really encourage if banks and ecosystem can actually work on it.
Yeah. And now I come to my last question. I will take quickly, reactions from all of you. I'll start with you, Mr. Gupta. Security is a very, very important area. We all discuss that. And in fact, security now, I always look at it in a different way. I remember that my Frankenstein story, that Frankenstein created a monster of the flesh. And the biggest problem Frankenstein had is he didn't know how to tame it. He didn't know how to control the monster. Here, the big problem is that the banks know that the digital innovation is very important. Technology is very important, but somehow it's difficult to understand how to tame it, how to prevent that frauds, because you are going to adopt the technology. So, Mr. Gupta, how are you going to prevent yourself from the cyber frauds? How are you securing yourself?
It's a very interesting question. I hope there is an answer. I don't think so. We will have an answer on this. Recently, we had to attend a 2-day cyber security seminar which all the bank CEOs have to attend and directors have to attend, which is framed by RBI in their office in Hyderabad. So cybersecurity is something which is like hackers and people will be always be ahead of you, and you will be always be chasing that event. What you need to do is you have to continuously keep on investing on. We have to continue to keep investing in the cyber security by building up greater engines and fraud risk management systems and everything else. But if you think that you will be able to control this completely or you are completely out of the problem, I don't think so that can ever be possible.
Mr. Singhal, your reaction on the security?
See, again, he did not think about insurance. So, he thought everything else, no? Such complicated terms he used. That's the problem. That's why it's always a push product. So I'm pushing it really hard. Buy insurance, to take this risk off. Second issue is, this is a real threat, no? So denying it, hiding away from it doesn't work. So it's like the chore police thing. When I started working, the biggest threat for me was pickpocketing on the salary day. And twice in my career it happened because I had to carry cash. Today, the biggest threat is phishing, malware, cyber attacks, cyber extortion, which is on my mobile also. And most of you may already having some malware already situated on your mobile, and it will trigger at a time when you think you're very, very comfortable. So those are real threats. You have to keep on having those measures to protect that, be well insured, because the risk has shifted from pure pickpocketing to your mobile getting pocketed. But this chore police will always continue, right? From the time simulation started to time it ends. You take one step, the thefts take another step, you take another step. This will continue, but the point you made is very right. You can't be oblivious to it and keep thinking it will not happen to me. It is happening very, very fast, because we have these monitoring tools of how the cyber attacks are happening. Sure. At times you'll be amazed to see at the space it is happening. You'll also amazed to know that most of you already would be on a dominant stage ready for a cyber attack, most of you. Yeah? That is how critical it is and how powerful it is. But to me it will continue. So there's no one solution that I can give right now. You keep on working, they keep on pushing it back. No? And that's how it will carry on.
Ma'am, your quick views.
Yeah. Clearly, it is something that all banks are seriously investing big sums of money, including our bank. But one of the important things is that for a cyber attack, very often it's your own employees who are compromised. And to me, it's very, very important about employees being conscious about when a phishing mail is coming. So in our bank, what we've done is like moment an email comes, and if the employee suspects, he just clicks on a button saying report as phishing, so that the employee starts becoming conscious of what kind of mails come. The second thing is, of course, we have these filters where the emails are taken away from the employee's mailbox, which are suspected phishing ones. So you need to constantly keep investing on internal and also making your systems more and more robust. But to me, it's a journey. It's an ongoing journey. And I don't think there's something like stop and start in it.
Mr. Sabharwal, your views?
I have nothing more to add, except for the fact that, look, this is an extremely important area, something which has to be looked at when you design your products, when you think about how you store data, how you make it accessible. All of that, needs to imbibe this whole thing about how you ensure that security is taken care of. It's an important area which every organization, today we have a CISO, a chief officer who focuses just on security. And this is an extremely important area. The only thing which I want to say is that there is nothing which has been discovered up till now which has a zero failure rate. So we will always have these challenges, and at all points of time, while we control this, we have to always look at how the benefits which are accruing to customers, and while you manage these risks, you should not at any stage compromise on improving customer experiences.
Great. So the watch is stopped. In fact, they were ringing bells. We have concluded the session here. I'm done with my questions. The time is over. Thank you so much, Mr. Gupta, Mr. Singhal, Mr. Sabharwal, and Zareen ma'am. Thank you so much for sharing those insights. Thank you so much for listening to us patiently. It was my honor to moderate this session. Thank you so much.